Well, hello there, my friends. Chris Marcus here with you on Friday, February 23rd for this week's Arcadia Weekly Market Wrap-Up. A little bit of a quieter week in the market, but we have a few whoppers for you just to keep you posted on what's going on. Dollar did not get thoroughly pounded this week in particular, although a few other stories here worth taking a look at. Down in Venezuela, after releasing the oil-backed petro, Venezuelan president hits at gold-backed petro oro. So basically, we had the government-backed cryptocurrency, the petro, on Feb 20th. And now the petro is a cryptocurrency unique in the world that is supported by oil. And Maduro has a surprise he will launch next week, the petro oro gold backed by gold. Even more powerful. Now, again, these are government currencies, so let's not go running to the freedom well just yet. Although to the degree just that you see this continued shift, especially there's some importance seeing it in Venezuela, because again, in America, everyone thinks these things are impossible to happen, but you look at the places where currencies are further along in their decay. Not that there's anything going on in Venezuela's currency market that won't eventually hit the dollar. But again, seeing that gold and cryptos not going away, not Dutch tulip bulb, there is something there. And again, seeing in places where the currency has already collapsed, which is really better than any speculation of what might happen in this scenario. Here again, we can see actual examples of how it is playing out in the world. And again, why might that happen in the US? Well, let's take a look at our 10-year bond chart. The yield's getting pretty high here. As you can see, this is the 1 month. Let's take a look at the 1 year, which puts it better in perspective. There back in September of last year, right around 2%, and now got almost above 2.9. Looks like it got to 2.95, which this move in itself isn't, I mean, it's a significant move, but what's interesting is almost like a foreshadowing of what might be to come, because you've seen as the yields go up, the stocks are getting pummeled. And in case you're unclear of why that happens, I mean, a stock price is theoretically the discounted cash flows. So, you know, you would discount how much the company expects to make 10 years from now. And with a higher interest rate, that means the present value of those cash flows would be lower. Taking that a step further, the stock price would be lower. Under a higher rate environment, borrowing costs go up. Again, the most easy example to look to is the housing market back in 2007, 2008. Yet, actually, if you go a couple of years before that, when rates started going up, 2004, 2005, 2006, and a lot of the debt that was only serviceable at the lower teaser rates became insolvent. Again, I've mentioned before how when Ben Bernanke started launching his quantitative easing programs, it's pretty fascinating if you check out his op-ed that he wrote back in 2010 for the Washington Post, where it basically said the whole point was to create the appearance of more wealth, make stock prices higher, yet he never commented on what happens when you reverse the policy. We got a taste of that 2007, 2008, and over these last month or two now, as rates are rising again, the Fed talks about continuing to raise rates. And one thing that I guess is starting to get mentioned a little bit more is that you have a massive interest expense for all that money that the U.S. government has borrowed. So as rates go up, that means more money the U.S. has to pay out in interest expense, which is already a lot. And keep in mind, I mean, we're not even close to anywhere near normalized rates. So God only knows how this would look at 5% or 6 or 7 or even higher, which is what it would likely take to undo what the Fed has done. So again, this is why I steer clear of the bond market, and with the exception of some very specifically selected stocks, I steer clear of the stock market as well. And again, we talk a lot about gold and silver as the alternatives. And another great alternative that, I still mentally, the perspective I think of the cryptos of is really a financial system that isn't completely manipulated and made into a mockery through printed money and banking shenanigans. Here, blockchain, you have an open ledger so everyone can see what's going on. You can't take billions and trillions out of industries like Medicare or military, where again, 21 trillion has gone missing. No one in the government seems to have found it yet, to my knowledge. So as a result, money has flowed into the crypto market, as you can see here, which certainly a challenging time. Again, the benchmark Bitcoin went up to 20,000, was down below 6,000 a couple weeks ago, has rebounded somewhat, been about 10 to 11,000 bucks the last week or two. And the question is, what happens next? Well, unless Trump and Steve Mnuchin and Santa Claus and the Easter Bunny have come up with some fantastical way of piecing Humpty Dumpty back together again, the unfortunate numbers of the U.S. fiscal situation have not changed. So while the best we can do at this point is perhaps guess at when this baby comes tumbling down, if there's some way out of the U.S. debt load without a default, whether that's a sneaky implicit default, which would mean just printing, you just print up 20 trillion and say, here, the debt's paid, which again would destroy the currency even more quickly. But actually, shockingly enough, is probably the most likely outcome. Of course, the other option is that you have an overt default, which would be essentially if they just say we can't pay the money back, we're defaulting on it, which based on Washington's history, you would think would be unlikely, although it was an article I wrote this week for Miles Franklin, just a few comments here. Hard-fought budget deal would boost federal spending for the military by almost $300 billion above limits set in a 2011 law. It's amazing. They're breaking their own laws to go deeper into debt. On top of it, for military, which a military analyst I am not, yet, geez, at this point, what other weapons could we possibly need? And to think that we need to continue piling on more debt so that more can be spent. I don't know, maybe we could just stop telling other countries what to do, bring some of those folks back home, let them do something a bit more productive. Yet, it's gotten to the point where here we have Mick Mulvaney, Director of Office of Management and Budget, says the proposal shows Mr. Trump has, for now, I could probably take out the for now and still be good, given up on balancing the budget over the next decade. Certainly Trump is not alone on that one. And it was, the last part here was fascinating. Budget forecasts lower inflation and government borrowing costs over the next decade than private forecasters project. I'm going to say sold on that one myself here. If someone can explain the last decade of Fed policy and how we're going to get lower inflation, I would buy a ticket to watch that one. And also the government borrowing costs, as I mentioned earlier in this video, especially if rates are rising. Good luck with that. So again, that's why you hear people talk about cryptos. You hear people talk about gold and silver, which have not risen quite so much to this point. But, that's the thing with trading in the markets. It's requires that fortitude to see, well, here are the conditions, what's going to happen going forward, and accepting that it may not be on the time schedule that you or I might prefer. Yet, if you're confused or feeling a little anxious, go watch that movie, The Big Short, again, which is such a brilliant metaphor of how, you can see how things have to ultimately resolve, although you get tested a little bit in between here and then. With the trade-off being that some of these markets are so far out of line that there are incredible opportunities, but as was shown in The Big Short, you got to sweat it out a little bit sometimes in between here and there. So I think certainly that's an appropriate way of describing gold, silver, and cryptos right now. Yet, at least if you're wondering what I'm doing, I continue my strategy of doing as little as possible, just leaving things, being patient, making some Federal Reserve jokes, and wishing you a great weekend. So with that said, we're going to wrap up and leave your comments below. I will see you next week.